This is Professor MoneyPigTrading, and today is July 24, 2021. We're going to continue the option trading tutorial 4.1 when you use vertical debit spread. And here we're going to have Amazon 179 plus profit example and minus 50, which is a loss case. And also we're going to take a look at Roku 121% return as another example. So really quick, if you haven't liked this video, make sure to like it. That'll help our channel tremendously. We also have a Discord community. Feel free to check it out. Really profitable at www.moneypigtrading.com, Twitter, YouTube, Instagram, all MoneyPigTrading. So we also put this option tutorial in our website, moneypigtrading.com/tutorials. So you can see each link, or you can simply just subscribe our YouTube playlist for our option trading tutorial to get the latest contents, or as a podcast for your long driving. So again, what is vertical spread? We mentioned in the last video, and the video link will be on the upper right corner. So basically, if you're looking at a long bull called debit spread, is a construction of two call options together at the same expiration date. One's a long call options with a lower strike price, and a sell call option with a higher strike price. So doing together, we are expecting that the underlying asset we're buying will go up, and the higher it goes, the higher the profit will go until a cap that we discussed in the last video. And oftentimes vertical spread is a safer option strategy most of the time. Let's take a look at example we mentioned in the last video, right? So we compare the long call put options and vertical spread in our vertical spread video, and oftentimes it's just safer and with a lower risk because even though you max out your profits, but you can define how much risk you want to pay, and oftentimes the premium is cheaper, so the potential loss you're going to have, whatever you pay for the option contract, will be lower compared to the long call put options. So let's take a look on Amazon example. It happened actually just 2 days ago on Thursday, July 22nd, 2021. We sold on our partner Flow.Go, which is option monitoring, real-time monitoring system that will tell you what are the institutes are buying. And basically we'll see a lot of things called call sweep. That means institutes or smart money, they're actually buying a lot of call options, long call option, betting the underlying asset will go up. And if you see a lot of this happening in a very short time, usually that means the smart money institutes or in the market expecting something's going to happen very directionally for this particular asset. And on July 22nd, 2021, Thursday, we're seeing $4 million of call sweep coming for Amazon. That means, and it's all July 23rd, 2020, Amazon 3650 long call. So that means there's only 1 day before the expiration for that particular contract. Everybody's buying like crazy for that contract. So you must be speculating like, something might be happening. Last time the same thing happened, Amazon actually had announced Jedi National Defense contract, and the price pushed up like what, $150 per day. And a lot of people are making a ton of money from that call options. So you definitely don't want to miss this kind of opportunity. And really quick, this flow goes our partner. If you use our link here, and we'll also provide it in the description for this YouTube video down below, you will have $25 for 25 days trial. It's really powerful. Potentially you can spot a lot of trading ideas and opportunities using this platform. So let's look at the Amazon. On the left side is a daily chart. On the right side is the hourly chart. You can see right now 4-day, 8-day EMA cross flagging to the upside. And on Thursday, there's quite a bit of push, July 22nd. And on July 23rd, it actually didn't push as much as we hope. Only pushed to 36.56. Probably a lot of money flow into Snapchat, Google, Twitter, those online advertisers. And on the right side is the Amazon hourly chart. You can see the big green candle. People are buying Amazon and in the meantime buying the long call options. And even though it's 1 day before the expiration, make you just speculating like, something's going on. Is this some big announcement tomorrow or something? And sometimes it's herd effects. People saying, there's some call sweep. They must know something, so I want to buy something. And then a lot of people just follow up, right? So sometimes it's really nothing, but people just follow each other. You can see that happen. In this case, probably just more like a herd effect, where something's supposed to be announced or happened, but hasn't happened until next week. We'll have to see in the coming week. But basically what you're going to see is then on the hourly chart on July 22nd, and Amazon started to dip back because there's a potential cyber attack and found the false news. And then Amazon started to push back up. And on Friday, continued to push up a little bit, but not as much. So when we see the call sweep on Thursday, July 22nd, what we decide to do is we do both things. So first, we actually long the call options for Amazon July 23rd, 2021, 36.50 call options. We long it. Basically, we pretty much follow everybody. Entry price is 11.5 per contract and set a stop loss at 50%. And unfortunately, during the cyber attack news come out, all the attack names pull back and it actually trigger our stop loss. This long call option actually got triggered stop loss at 6.1 per contract where we stop loss. And then the profits is minus 51%. And on the contract expiration date on Friday, this contract is actually at where we stop loss at $6.64. So it's not much different. And the benefit of using these long call options is you don't really need a margin account. You can do it with a cash account. On the other hand, at the meantime, we use a vertical spread just to be on the safe side because the time frame is so short. I'm not sure how much momentum we're going to see. So we actually spend more money on this Amazon local debit spread with $60.7 per contract. We'll set the 50% stop loss. And because vertical spread usually moves the price, contract price moves slower. So when a cyber attack happened in the hourly chart, you can see the Amazon pullback here. Your long call option actually lost 50% right away. In the meantime, your vertical spread actually only lost like 10% of the value. So it's relatively a safer trade. So never trigger our stop loss. And then Amazon continued to push up and make both legs in the money because Amazon closed at 36.58 on Friday, right, July 23rd. So Friday before closing, we just decide, hey, it's too much risk. We don't want to take it. $19 per contract is 179% return already. So we just decided to take the profits, leave the $1 per contract on the table. At the end, if you hold it until this vertical spread to the expiration, it will be $20 per contract. So in this case, you can see the long call option is way more risky, even though if Amazon push up like $150 per share on Friday, yeah, you're going to be super rich. But at the meantime, you're going to lose money if it doesn't happen very quickly. So it's a high risk, high return trade. On the other hand, vertical spread is a saver. And this day, I like to trade both in a shortened time frame trading plan, just to be on the safe side. And trading is more like a marathon. You don't want one bad trade or injury to end your career, right? So it's the same thing. If you are all into one long call option, very likely you're going to wash out stop loss, even though the trade is actually heading to the desirable direction. On the other hand, vertical spread usually moves slower, but it's a safer trade, and you can have those, continuous successful trade, and 100, 150, 200%. You will still grow your account relatively quickly, and you don't have to, all into long call option. That's just our personal humble opinion. However, the vertical spread could make you or us miss big upside, like we mentioned, right? Here we're going to take a look at ROKU as an example. ROKU on Friday, July 23rd, announced that they're going to have earning reports, and that's triggered a massive buying interest in this name for some reason. And you can see this is the hourly chart. ROKU just go all the way and stop on Friday, July 23rd, which I didn't expect. And personally, I put ROKU as a blacklist on day trading because it's so volatile. The price action is just, not very predictable. I got beaten by ROKU day trade so many times. So in this time, I actually didn't use Friday Lotto 440 long call, which was if you enter at 62 cents. And then if you use it at the closing date, ROKU pushed out 12% to like $473 per share. This contract is going to be at $34. So pretty much you're going to make like 5,500%, which is ridiculous. And it's really amazing. If you budget 1,000, you're going to make 27,000. However, it's a short time trade lotto. Usually, at least in my case, I'm sorry, just touched the microphone. You don't want to put that much money into a smaller trade that's going to expire in the same day. And it's really hard to spot this opportunity. You probably try like 20 times, you won't even hit it one time. So before you get this opportunity, very likely your account's going to blow up already. On the other hand, on the safer side, use the vertical spread expire next week. We enter a major size, $6.45, 50% stop loss. On Friday, because Roku pushed out so much, decided to take partial profit at $14.5 per contract. The max profit here is $20 per contract because 460 minus 440, which is $20, which is 125%. On Friday, before closing, that contract's at 14.5. Is Roku can stay before above 460 before July 31st expiration date, this contract's going to max out $20 per contract, which will give us about 250% return, which is still pretty decent. And since it's a safer trade, we're expecting Roku to maintain above 460 next week. We actually enter a major size in this case, $6,000. Even though it's still going to only make 14,000, still pretty decent. Only make 14,000, still pretty decent. Safer trade. You can sleep at night, more soundly. And that's why we like vertical spread so much. Just a disclaimer, we actually didn't enter the Roku long call because, like I mentioned, we put it in a blacklist on day trading. But if I enter, personally, I'll probably budget 1,000 just so I'm on the safe side. But here's a perfect example of vertical spread saver, but sometimes we'll meet the huge upside in this case. So yeah, just a really quick example. And just if you're interested in swing option trading, check us out on www.moneypigtrading.com. I have a benchmarking account, a small account, started with $1,500 early May, and at some point in July, it actually pushed up to $2,000. $20,000 is up like almost 1,500%. Right now, it pulled back a little bit to around 16,000, but still doing pretty decent, 1,000% return. One of our member, and a lot of our members are making decent money lately. This one particular member joined on June 24. Started with $2,200, and now his account is traded at about $12,000, which is 540%. So again, if you're interested in our Discord community, make sure to check us out at www.moneypigtrading.com. Twitter, YouTube, Instagram on MoneyPigTrading, and don't forget to like this video. See you in the next video. If you would like to see how to buy vertical spread, check the video. The link is on the upper right corner. I will see you guys